We all know it's been a disappointing year for gold, but over the last month, it is trying to make something of a recovery. So are we going to finally see a strong finish to 2021? I thought we'd do an update on gold. I've said a few times this year, it's not the most exciting market, which is perhaps an under-exaggeration. If we look at where it's been trading this year, we're flat for the year. We're in a sideways range, well off those 2020 all-time highs. But if we take a step out here, that long-term trend for gold going back to August 2018, so going back 3 years now, that long-term trend for gold is still up. And that's the reason I did the trade last time round. And here it is, buying at 1778 on the 20th of October. The market is about $10 in our favor. Nothing too exciting, but after a year of sideways trading, are we going to see a bit of a boost over the next couple of months? I'll talk a bit about what's been going on with gold now, some other analysts' opinions that I don't agree with, then we'll come back onto the platform and take a look at the charts in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought we'd do our monthly update for gold, taking a look ahead over the next few weeks. What can we expect? Is it about to get any more interesting? So as usual in this video, I'll talk a bit about what's been driving it, what to look out for. I think some of the reasons that other analysts think it is going to start rising, which I don't necessarily agree with, but we'll talk more about that. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And of course, we now do every Friday at 2:30 UK time. We do a live stream direct from the YouTube channel. If you're subscribed with the alarm bell notification pushed, get a message off YouTube just as we're about to go live. Right, let's get into it. Take a look at gold in a bit more detail. What can you say about gold this year? It's been a boring year. Where the price of gold is trading now is 15% roughly below the August 2020 all-time high. We saw it trade up to $2,075 or thereabouts. But the story for this year has been a boring one, with it just trading sideways. Stock markets continue to push up. I think this is one reason why gold has not had a good year. Again, in October, we saw stock markets, if we look at the S&P 500, the NASDAQ pushed out yet again to all-time highs. So investors have been embracing risk, which I think takes the shine away from the more defensive assets such as gold. Plus, of course, if we look at the performance of cryptocurrencies, again, we saw in October, Bitcoin briefly, for example, push out to fresh all-time highs after setting fresh all-time highs back in April, May this year. So for those who want, assets alternative to stocks, alternative assets, Bitcoin and crypto in general, it's been a really interesting year and a good year. And I think, as I said before, it does feel as if perhaps the likes of gold and silver have sort of slipped off the radar this year for an awful lot of people and fallen in between the likes of crypto and stocks and just really been ignored. So what could change as the year goes on? Well, I think inflation, I've mentioned this in recent videos, inflation is going to be, I think, more of a problem than central banks at the moment would have us believe. So if we see inflation, clearly it's getting high at the moment, if we see it stay here rather than be temporary or transitory, as some of the central banks have said, then we could see the likes of gold start to pick up as the classic hedge against inflation. So a defensive play against rising prices. But the flip side here, the risk here for gold and other defensive assets, if inflation does prove to be perhaps more stubborn than many were expecting, then perhaps interest rates will have to start rising. And that could, again, pull people away from more defensive assets like gold into other alternatives. So I think it's going to be interesting. I said I've read a couple of analyst notes ahead of this. I watched a couple of YouTube videos of sort of people who have been bullish on gold for some time, through this year, through last year, over the years. And I was trying to see, well, what's the argument for gold really racing away from here? And the theme was, I was a bit disappointed that actually the theme was, well, gold and silver should go up an awful lot and hit multi-year highs next year because everything else has gone up over the last year or so and gold and silver haven't. And it just seemed a bit of a weak argument to me. Everything else has gone up. Yes, there's been loads of momentum in other markets, but not for the likes of gold. And I have to say, at the moment, I don't see that changing. I think this inflation issue is one to watch. The longer term trend for gold is up. We do have that one position in gold at the moment. But as usual, let's take a look at some of the levels to watch and see what we can expect over the next few weeks or so. For me, the next big hurdle on the upside comes in around 1,815. That's the 22nd of October high. After that, perhaps 1835, the highs from mid-July. On the downside, we've got lots of support left. So if you want to buy the dips, I think there are lots of levels to watch for a reference. For me, the mid-October low around 1,760 should be good support if we saw the price weaken from here. But as usual, let's put some color on these numbers. Let's take a look at the chart of gold and see what the opportunities might be. I suppose if we stick with this long-term trend for now, you could say the move from the all-time highs in August is something of a correction. And at a push, I think you could also say that's still going on. We did in August, in that flash crash this year, August 2021, we did see it move very briefly to new lows for this correction. So you could argue the case, well, it's still correcting within this overall 3-year trend. The correction, that trend line comes in around 1835, that sort of area at the moment. So I think if we did see a bit of strength through there, things do get a bit more interesting. But for me, I think the level to watch, look at these highs from the 15th of July now. So these highs have been in place for almost 4 months, so 3.5 months. We've seen the price of gold cannot really get through 1835, 1840. So for me, that's when things would get a bit more interesting for the gold price. If we were going to crack this resistance level that has been tested a few times, perhaps then we see a bit more momentum come back into the price and we can start targeting the June highs around 1920. So maybe that's something we will see happen as the year draws to a close. Looking at the RSI down here, 10-day RSI as usual. Not much going on with this. We had an overbought signal 25th of October, near enough with the price trading up towards 1810. It has slid back since then. For me, that recovery is still going on off the August lows. I flipped this over to an hourly chart and you can see we do still have something of a mild uptrend on the shorter term time frame. If I was a buyer now at 1788, probably the closest I'd want my stop would be the other side of 1760. So I do think this is a market that in the short to medium term is still mildly positive. It doesn't change the year to date, which has still been sideways to slightly down. So for me, it's all about this 1835, 1840 level, I think, in the next few weeks. Let's see if it can crack that. And I think if we can, as I say, I'll be targeting a run back up to the June highs. Even if the price gets knocked back from where it is now, I'd still be keen to be a buyer on dips. I'm not expecting any massive move in gold by the end of the year. I think at the moment we're just seeing really muted trading. It is a fairly boring market. Other markets have been much more interesting this year. It's a great lesson that markets do blow hot and cold. We saw all-time highs in gold last year in August. Some great trades in the summer last year for gold, but something of a non-event this year. So there will be a time, I think, when gold comes back into fashion and is a bit more interesting for us. But at the moment, I think for me, it needs to break 1835 to start getting a bit more aggressive on the upside. I think the risk at the moment is, for just broadly speaking, more sideways trading. But I'm happy for now to have that longer term trade from last time round, really looking to just have a position in the direction of that 3-year trend for gold. That's it for this update in gold. I'm still bullish. I've got that position on in gold with that long-term trend. I'm not expecting fireworks over the next few weeks. We'll come back to it. We'll do an update throughout the month, see if anything changes, if it does pick up in volatility. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.